Okay, welcome everyone. Monday morning. Let's get right into the stock market technical analysis. If you're new, check out my course. You might learn some things in that course. It's a $99 course for about 5-6 hours worth of training. Or just follow along these videos. I think you'll pick up some stuff as we go. But the course will really help you really jumpstart that. And then this information in the videos will really be supplemental. You'll see what I'm talking about when you've taken that course. I think a lot of people that have taken the course have responded pretty positively. All right, guys, give me a thumbs up. Here we go. Let's start out with triple Qs. All right, so the thing is, we got this downtrend line right here on the hourly. Qs was in a downtrend, and recently it's popped above that downtrend last week, but it's not impulsive. It's just kind of hanging out. So what I think we're waiting till the Fed. The Fed reports on Wednesday, I believe at 11. I think that's when they normally report Pacific time, the market's likely going to go into a holding pattern until it figures out what the Fed wants to do. So yeah, watch for that. We might just chop sideways or just kind of grind along this trend line here until the Fed, and then it's either up or down. So it's undecided. So at this moment in time, I'm still flat. The Qs, I'm going to remain flat until I either see some sort of definitive break one way or the other, up or down, or and that's likely going to come on the Fed. So yeah, watch this downward trend line. If you want to mark it out, then I think that'll help you. We break back below the trend line, start to break down. That tells me we're going to make another leg down. And going to the daily, that next leg down, I believe brings us all the way down to this 284, 285 area on the Qs. You'll want to watch a 297. That was your former low. That's where we got the bounce or the reaction. So again, we break into the downtrend, into this downward channel. If we break back down into it, then I think we likely head straight down to 297. Watch that level for a break. I think it'll break if we're back down in there. And if we break, probably go into 285, this area where we'll likely get a bounce down there. All right. If we break to the upside because the Fed says something that the market likes, then look for the gap fill right up here. All right, you're likely going to gap fill up at 330. Okay, so for me, it's kind of sit on my hands on this trade until we get some sort of direction. And this would be that's likely going to be the target for an upside move where I'd likely be interested in reshorting the market up at the 330 area. Or if we break back down, then I think we go down to this 285, 284. Why 284? Well, if you look at the weekly on the Qs, this is your bull market price channel. All right, this is going back to 2009. So each candle represents 1 week, and nice clean upward channel. And as you can see, that's the top of the channel. So we had lots of reactions along the top of the channel before. If we fall straight down to that, we're likely going to get a reaction there again. The first tag of a trend line, when you haven't hit it for a while, you're likely going to get some sort of reaction. So a reaction constitutes a bounce or a consolidation period. Moving on to the SPY, let's go back to the hourly. Again, SPY's just grinding around below the major trend line resistance, which is this blue line. But we're just kind of grinding around. So we can pop to the top. We could move down. Watch the Qs. The selling really started in the Qs, and it started to get into the SPY, but it wasn't that impulsive. The SPY, I think, recently, over the last couple weeks, only fell about 5%, where the Qs fell 12%. So watch the Qs. That might be, technology. That might be your tell on whether we're going to get another leg down. If we get another leg down in tech, I really think the SPY is going to start to roll over as well, and we're going to get more than just a 5% correction. So watch for that. That's my tell right now. The major resistance line right there in blue, that goes back all the way to 2009. There's your 2009 lows. You can see we held support. This is a weekly chart, so this is major trending. This is the bigger picture. We broke support in 2018. Backtest in 2020 or late 2020, then you get the COVID drop, and then you can see we're just backtesting again. So we have not recovered that broken support. We're at major resistance. I think it's likely we're going to head lower given the nature of the negative divergences. Those are still intact, Recently, we made a new divergent high right up here, so we're just extending that negative divergence. I think it's likely we're going to roll over, but we got to see it, so we'll just wait for it. Small caps here. The thing on small caps that I'm watching is this on the short term. Here's a daily chart. I'm looking at this trend line right here. We've just been walking up this trend line. I can actually adjust it right there. And I'm looking for a break of that. We had a breakdown here, ended up being a bear trap where they bounced it back up. Another break, nice impulsive breakdown of that. I think that's going to set this thing in motion to the downside. I do think that's coming. We have negative divergence. Look at that. See the negative divergence on the daily? Nice clean negative divergence on the daily. And so this is a divergent high. And this divergent high is also taking place at major resistance, which is this purple line. All right, if you go to the purple line, that goes all the way back to 2009 on the weekly chart. And, you know, there was no trend established all through this time, really. The longer term trend. And then here we broke below it, but then we established the clean trend. The market kind of fell in line and said, okay, this is going to be our bull market trends. You can see all the support that we held on these weekly candles. This is going all the way back really from 2016 till about 2018. So a couple years. Held that, broke in 2018, and then this whole rally is just a big, massive back test or, kickback rally right to resistance. So you can see we're at major resistance with negative divergence on the daily chart, and we're just waiting for that sell signal, which would be a break on the daily chart of this trend line right there. All right. Here's your long bond TLT. Again, really important to watch this long bond. More selling in TLT. Okay, means interest rates are going to continue to rise. That's negative for the stock market in general. Higher interest rates will hurt the stock market. That's a very, at its highest form, that's basically how it goes. So watch TLT to continue to sell off. If that does, then interest rates will rise, and we'll watch for weakness in tech and really just the general market. Here's gold. This is gold bullion, still hanging in there. Not doing a whole lot today. It's just kind of sideways. It's just a repeat, of what's going on from last week. But we bounced off major support. We bounced off support right here. And you can see this trend line. We got 1, 2, 3 reactions. So there's a nice clean trend line. What I would be looking for, to be honest, is a move. Right now, it looks like we're going to move back up to, let me get rid of these just to make it pretty clear. I would be looking for a move back up to this 1790 area. That's going to be your next level of resistance that we're going to have to battle through. I think we're heading straight there. 1790 goes all the way back to the last bull market rally in 2011. You can see that was resistance. 3 tags of that. 1, 2, 3. This was your momentum overshoot, so that doesn't qualify. But then you tagged it. That's confirming your resistance. As you zoom in, you can see we broke above it and then impulsively ripped. So that impulsive price action is a reaction because you broke above major resistance. So you broke above major resistance, came back down, back tested it, undershot it just a little, but it recovered. You can undershoot levels just a little, run some stops, recovered, and now we've broken down. And yeah, that's pretty impulsive breakdown. So again, kickback rally. That's the next major level of resistance where this thing's going to have to battle with. Watch how it performs down there or up there. Financials continue to walk up this trend line. You can see on the hourly chart, we just have this upward trend. We've got a reaction all through here, getting another reaction today. So no sell signal, just continued upward trend. We are looking for that sell signal now. If I look at the daily, we don't have the best negative divergence. Maybe it's here in the PPO. It's starting to show up there in the PPO. So we'll watch for that to confirm, and then watch for the break of this trend line. If we break the trend line, get a nice impulsive breakdown, I think XLF heads down to this $30 area. I get $30. That comes all the way back to 2011. You've got support all through here, support, and then you broke and then tagged as resistance, consolidated underneath it, and then broke, tagged it as support. So lots of reactions. That's the point. So you break down, you're probably going to head down there. Energy is starting to break. It's not impulsive yet. We got this XLE. You got this upward trend line right here. If I look at the hourly, you can see pretty clean trend line. We're starting to break down, but not a lot of follow through. It's not super impulsive. And again, the Fed's coming out on Wednesday, so I don't know. Usually, I don't expect the market to do a whole lot until the Fed comes out. So again, I'll probably kind of pare back on my updates and probably just go back to one a day until after the Fed comes out. I was putting out 2 a day last week because we were in a highly volatile time, but usually the market goes into a holding pattern before the Fed, so it's going to probably just die down and just everything's going to be just kind of flat. After the Fed comes out, we'll pick back up on those updates. XOP is one to look at. You can see this is also the oil and gas. This is gas exploration companies. That's another one to watch. You can see it hasn't broken its uptrend line right here. So kind of starting to, but it hasn't quite broke. XLE has broke a little bit. So watch that. I like the oil and gas sector in general, but it's up huge. So we could, I am thinking it's pretty due for a pullback. So we'll watch for how things, come out after the Fed. Riot. Let's look at the daily. This is a Bitcoin proxy. So it moves quite a bit. Yeah, there's no bearish divergence on Riot. It did gap fill recently. You can see this gap that it had right there. And we just gap filled at 65.20, kind of consolidating there. But again, I don't see any negative divergence on it. You did have this big uptrend right here. It broke and then did this huge back test, kind of broke above it just barely and then broke down. So we could get rejected here, but again, I just don't see enough in the chart that tells me that this is a high probability short. So I'll keep an eye on this one. AMD. So again, I still like AMD short. We've got one of two things going on. Here's your uptrend line going all the way back to 2016 on this daily chart. We held support there. Lots of reactions. And as I zoom in, you can see we just broke that support right there. We're back testing, but not impulsively breaking. This isn't like a impulsive recovery where it just is a bear trap. If let me look at the hourly here, you can see, if it's a bear trap, usually when you recover, the bears realize, oh, I'm wrong. They're covering their shorts, and then the longs pile in, and that gives you that gives you an impulsive lift off. We're not seeing that. All we're seeing is this grinding action along this trend line. So to me, this just looks like, we recovered it, but barely, and we're going to fail. And this is really just a back test of this trend line. Again, markets don't always react perfectly to trend lines. Sometimes they overshoot them, chop people up a little bit, run stops. To me, this looks like we're still going to fail as of right now. And going to the daily, look at the negative divergence that's right there. Big negative divergence. See how the momentum's just been dropping off? And this was a divergent high. That's a divergent high. These are all divergent highs telling me that we're likely going to reverse trend. And the trend was up, going all the way back to 2016. But now we're seeing signs that we're going to reverse trend. And we're seeing a break. And yeah, I think we're just starting the potential to reverse trend. And next level of support is 58, it's about 59. I think if it starts to break down, we're heading straight down to 59. That's where we're likely going to get a reaction. From where we're at now, that's a move of about 30%, 27%. So I think that's the next move in this. As of right now, that's what I see in the chart. Okay, and to me, this APPS, Digital Turbine, looks very similar to AMD. You've got an upward channel, kind of an upward price channel there. And we put in negative divergence, started to diverge. So, this price action was divergent high price action. We broke trend. They've recovered it. But again, not impulsive yet. You can see we're just kind of grinding along this trend line right here. So what I'd wait for, because obviously this could have been a bear trap. This breakdown here could have been a bear trap, and they recovered, and they're going to just continue in this upward trend. But I'd wait for a break of this trend line. If we break it again, look for it to be impulsive. Then I think it's likely if we break it again, we're heading straight down to all the way down to here, to 42.70. Okay, sorry guys, took a phone call talking about March Madness. Anyways, so Tesla's kind of, Tesla I think could go a little higher from here. Resistance right now I see is about the 780 area. Right up here. Looks like we're starting to break this downtrend and starting to kind of work our way higher. So 780 I would say is the next level of resistance. I'm not in this one right now. I did take some profit on this drop. That was a good size drop. From the high to the low, that was a drop of 40%. So okay, enough of that. The ones that I really like right now for the long side, kind of the trade that I think is, my next trade idea, I suppose, is just long these gold miners. They look like a really good area to buy recently. I was loading up on them, and so far they're working out. We can start off with this WPM. I pointed that one out. So this was your divergent low right in here. As I go to the daily, you can see bullish divergence. See how the momentum's moving higher right there. And you had a support area of right here at about 37.20. Held that support, came in here, held the support, and then recently broke down, but it didn't go anywhere, and we had bullish divergence. And that sense, once it recovered, it looked to me like a bear trap or a false breakdown, and we're off to the races. So that is, from that recovery point, that's a move so far at the high of about 8%, and it continues to move higher. So I think we're heading up to this trend line right up here. This is your downward trend line, likely going to get a reaction up there. And then a break of that trend line, and this thing's off to the races. That's obviously possible, but the trend line I think is obviously if you're in it for a short-term trade, that would be the area I'd take profit. If you're in it for a longer-term trade, I'd probably just wait for a break of that trend line. And many of these gold miners are continuing to really look well. I can kind of go through individual ones, but the point is these gold miners are all looking pretty good. They're all starting to recover. Here's Newmont Mining up 4.5% today. I bought some of that. I mean, a lot of these are looking really good. So I continue to like these, and I'm going to continue to really focus on these. I'll probably put out an individual video just on the gold miners. All right, guys, that's all I got for right now. I'm going to get the video out. Thank you. Leave me a thumbs up, and I'll catch you on the next one. Bye.